How much cash can you receive in a single day? What is the legal limit, and what happens if you cross it? One mistake, and everything can fall apart. Imagine this: one day someone shows up and says they've sent you 2.5 lakh in cash. You are surprised, but also happy. Money has come in, after all. But soon after, an income tax notice lands at your door, stating that you must pay 2.5 lakh as a penalty. Shocked? This isn't fiction. It can very much be reality if you ignore the rules related to cash transactions in India. The government of India has set very strict rules for cash dealings, and if you violate them, not only can your income come under scrutiny, but you may also face heavy penalties and even legal action. What's alarming is that many people are still unaware of these rules, and end up falling into traps they didn't even know existed. Today, we'll dive deep into these rules and their implications. But before that, if you are new to our channel, don't forget to subscribe so you never miss an update from us. Let's now begin today's important discussion, without any delay. As per Section 269 of the Income Tax Act, 1961, no person in India is allowed to receive more than 2 lakh in cash from another person in a single day. That means, even if you receive just 2 lakhs and 1 in cash from a single person on a single day, you've violated the law. And the penalty? Equal to the amount received. So, if you receive 2.5 lakh in cash, you'll have to pay 2.5 lakh as a penalty, out of your own pocket. Trying to break it into parts, say, one payment in the morning and one in the evening, won't save you either. The law treats all cash received from one person in one day as a single transaction, regardless of how or when it's given. This rule is not just symbolic, it is strictly enforced. The Income Tax Department and banking institutions actively monitor large transactions, and any suspicious cash movement can bring you under the scanner. So, even a small ignorance of this rule can lead to big trouble. The government does not view such transactions in separate parts, but rather adds up the total amount received from a single person in a single day. For example, if you received 1 lakh first and then 1.5 lakh later on the same day from the same person, the total would be 2.5 lakh. Now, even if you received it in 2 parts, it will still be considered a violation of the law. And the punishment is fixed, a penalty equal to the amount received. That means a single mistake could cost you your entire savings. And this doesn't just apply to personal transactions. If you are accepting cash for business purposes and ignore the rules, the penalty can be even more severe. Now the question arises, do these rules apply only to personal transactions? The answer is no. There are various restrictions on cash transactions in business and professional dealings as well. For example, if a businessman or company spends more than 10,000 in cash, that expense cannot be claimed in their tax return. Meaning, they won't get any tax deduction on that amount. So not only is the money spent, but the tax burden also increases. Moreover, those who make political donations or religious contributions in cash also have limits. Any donation made in cash above 2,000 will not be eligible for income tax exemption. The purpose behind these rules is to ensure transparency and that every transaction can be traced. Now let's talk about the banking system. Rules related to banking transactions are also extremely important. If you deposit more than 10 lakh in cash into your bank account in a financial year, the bank reports this information directly to the Income Tax Department. This means the government is aware of your cash transactions, and if the source isn't clear, an inquiry may begin. Similarly, if you pay a credit card bill of 1 lakh or more in cash in a single transaction, the bank also reports this to the government. The sole purpose behind this is to monitor large cash movements and prevent tax evasion. This system has been put in place to bring transparency and to clamp down on black money.
So, if you think dealing in cash is easy and keeps your privacy intact, that's just an illusion. In today's digital age, the government has developed technologies and monitoring systems that can instantly detect large cash transactions. It's no longer limited to banks or tax offices. Now, data analytics and artificial intelligence are also being used to track who is giving or receiving cash, when, where, and how much. And once the needle of suspicion points toward you, escaping action from the Income Tax Department becomes extremely difficult. Now another question arises. Can you keep as much cash as you want at home? The answer is a bit complex. In India, there is no strict legal limit on how much cash you can keep at home. However, if the Income Tax Department conducts a raid and finds a large amount of cash, you will have to prove its source. If you fail to provide a valid explanation, that money will not be considered as part of your declared income. Instead, it will be treated as undeclared income, and you may face heavy tax and penalties on it. And this assessment won't rely solely on your documents. It will also take into account your banking habits, past declarations, and your lifestyle. So, keeping large amounts of cash at home without proper records can lead to serious consequences. This simply means that you can keep cash at home, but that cash must be linked to your declared and legal income. For example, if you showed savings of 5 lakh in your income tax return last year and you have 2 lakh in cash at home, you can justify it. But if your declared income is 2 lakh and 10 lakh in cash is found at your home, it will definitely appear suspicious to the Income Tax Department. And if the investigation confirms it as undeclared income, you may have to pay 60% tax along with 25% penalty and 4% cess, which means more than half of your money will go to the government. Now, if you are a business person or freelancer, this information becomes even more important for you. Small traders, shopkeepers, or local service providers often prefer cash payments. But if these cash transactions exceed the legal limits, not only the Income Tax Department, but even the GST authorities may take notice. In such cases, a tax evasion case can be filed against you, which is very difficult to escape. And if any customer or supplier reports your activities to the tax department, your troubles could multiply rapidly. The government's goal is not just to create laws, but to make the economy more transparent and digital. After demonetization, the government has taken several steps to promote cashless transactions, such as UPI, NEFT, RTGS, net banking, and mobile wallets. Using these channels not only keeps your money safe, but also creates a clear record of every transaction, reducing the chances of future trouble. Moreover, these methods contribute to the growth of the country's GDP and help strengthen the financial system. That's why the government is now actively promoting digital payments at every level. Now it's up to you to decide whether you want to secure your future or risk everything for the short-term convenience of cash. Because if you receive more than 2 lakh in cash in a single day, not only your wallet but also your reputation and legal standing could be in danger. So it's always better to conduct all major transactions through banking channels and play your part as a responsible citizen in building a digital India. Also, spread awareness among people around you so that they too avoid making unintentional mistakes and stay safe from legal consequences. Remember, in today's time, lack of awareness about rules is not accepted as an excuse. The law clearly states that ignorance is no excuse. So be cautious, stay informed, and handle your financial transactions wisely. This initiative by the government is a significant step towards making the country's economy clean, transparent, and strong, and every citizen has a vital role to play in it. Let's all come together and be part of this change by moving towards safe, responsible, and informed transactions.
Taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, If you like our content, subscribe to the channel and press the bell icon so that you stay connected with every news story. Thank you. GRT Business YouTube channel sources news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.